Dear viewers, markets have been correcting over last few weeks. There hasn't been any dramatic crash so far. Still, the experience has been very different on the ground, especially if you are invested beyond the large indices. The Sensex is down about 5% from its peak, but once you look beyond that, the picture changes. Small caps are down closer to 15%. For many portfolios, the drawdown feels much deeper than what the index suggests. If you own stocks, you don't really need data to understand this, you have felt it. In a calmer market, a correction like this would have been seen as an opportunity. Investors would look at past cycles, they would identify good businesses that have corrected, and they would start accumulating slowly. This time, though, the backdrop is more complicated. There is more uncertainty around. Geopolitical tensions are higher, trade policies are shifting again. With the US imposing tariffs, the environment for exporters has become less predictable. Companies may still find ways to redirect sales to other regions, but margins usually take a hit when the premium markets become harder to access. This is not something that the managements always highlight. Most companies prefer to focus on what is going right. That is why in markets like these, I try to focus less on what managements say and I pay more attention to what they do, because actions carry much less noise. One such action is insider buying. This is when the promoters or senior management buys shares with their own money. This brings me to Senores Pharma. The Indian pharmaceutical sector, especially generics, has been under pressure for some time. The old model of manufacturing in India and exporting to the US is losing its edge. Competing purely on price is getting tougher. Generic price erosion has intensified. Even large Indian pharma companies are rethinking how they operate in regulated markets like the US. Senores Pharma stands out because it has taken a different approach. A large part of its sales and profits comes from the US market. More importantly, this business flows through a compliant manufacturing facility located in the US itself. That makes the company relatively insulated from tariff risks. The company focuses on underpenetrated niche generics. Many of these come with some level of exclusivity in regulated markets. Senores has also partnered with government-linked CDMO clients. It is working on backward integration through Indian APIs. At the same time, it is moving away from low-margin emerging market models. With the plans to enter sterile injectables in the US, the company appears to be preparing for the next phase of growth. What really stood out for me is how insiders are backing this story. Senores Pharma is a relatively recent listing, yet promoter holding has increased from 45.77% in December 2024 to 45.81% in December 2025. During December, promoters bought shares worth about 86 lakh from the market. The average purchase price was around 814 rupees per share. These purchases happened between rupees 762 per share to 823 rupees per share. The stock is currently trading below these levels. There is more. The promoters have shown willingness to infuse additional capital. In an upcoming EGM, there is a proposal to issue around 1.17 million convertible equity warrants. The price is about rupees 812 per share. This will be done on preferential basis to the promoter group. If fully exercised, this could result in an infusion of nearly 95 crores. It is also worth noting that the price at which this is happening. These investments are well above the IPO of a price of rupees 391 per share. This is very different from cases where promoters have sold shares after a sharp post-IPO fall. To be clear, this is not a recommendation and it is not a call to action. But in a market filled with uncertainty, Senores Pharma is a stock that deserves attention. Not because of predictions, but because insider actions are sending a signal. Thank you for watching. Goodbye.